Are you dreaming of buying your own home in 2024, but it kind of feels like you're navigating a maze in the dark? What if I told you with the right knowledge and the right tools that your dream of owning a home is more achievable than ever, especially when you compare it to years past like 2023? Well, today I'm going to unravel the mysteries of the housing market and guide you through the journey of buying a home in 2024. We're going to discuss everything from the latest market trends to what you need to focus on as a potential home buyer to get the most bang for your buck when you're trying to buy a home in the 2024 housing market. By the end of this video, you're going to be equipped with the essential knowledge and confidence to take the first steps towards becoming a homeowner. Now, before we dive into this, I'd like to take a minute and ask a favor. If you find any value in my videos at all, do me a favor and hit that thumbs up. Not only does it help the YouTube algorithm push it out to more people like you, it helps me accomplish my goal of educating home buyers and helping them accomplish their goals. And if you want to become an expert around everything real estate, do me a favor and hit that subscribe button. Now, one thing I want to talk about very early on in the video, this video isn't to convince you to buy a home. In fact, I'm not going to be addressing the question of should you buy a home. I'm assuming that you watching this video means that you have interest in buying a home and you're just looking to gain a little bit more knowledge. You're looking to become more of an expert, if you will, when it comes to the home buying process. But with that, I think it's very important to understand the current market that we're likely headed in and the one we're coming out of. 2023 was the least affordable housing market that we've ever had on record. Not only did we have interest rates hit 23-year highs, we also had home prices hit the highest levels that we've ever recorded on record. In addition to that, we had inventory housing supply sitting at some of the lowest levels that we've ever recorded. So between high interest rates, high prices, and very little properties to choose from, it made for an extremely difficult housing market. So if you were someone that tried to buy a home in 2023 and you just couldn't do it because you couldn't find the right property, things were just too unaffordable, well, 2024 is going to offer some relief when it comes to the housing affordability front, but I'll be completely honest, it's not going to change entirely. We're not going to see a housing market crash in 2024. We're not going to see interest rates back down into the 3 and 4% range, and we're not likely to see inventory improve in any meaningful way. But at the same time, we are going to see mortgage rates improve. We are going to see some more inventory come to the market, and we're likely going to see home prices stabilize a little bit more while wages continue to increase. So housing affordability is going to improve, but with that, it's not going to be dramatic. And what we're going to talk about in today's video is some things that you can focus on yourself in order to help that affordability metric when it comes to you being able to buy a home and maximize your budget during the process. Now, as I mentioned earlier in the video, I assume that you've already decided that you want to become a homeowner and you're looking to focus on what you can do as a potential home buyer in order to maximize that opportunity, if you will. And so we're going to start by talking about one of the very basic things that you should be doing as a home buyer before you ever start looking at houses, before you ever talk to a mortgage lender or a real estate agent, and that is creating a budget. Now, I realize when I say that, it sounds very elementary, and you're like, Jeb, why am I watching a video on how to buy a house and you're talking about a budget? Well, it's because your budget is probably the most important piece of the entire affordability puzzle. Buying a home for most people is the largest financial transaction they'll ever make in their life. So making sure you avoid big mistakes is imperative to making sure that you're not putting yourself in a bad financial position up front. Because when you go and you talk to that lender to start with and you go through the pre-approval process, that lender isn't going to talk about your budget. They're just going to talk about what you can actually afford to purchase based off the debts that show up on your credit report. And it's important to understand how this works. When a lender approves you, they base how much you can afford to purchase off something called a debt to income ratio. It's basically your debts, your monthly debts, versus the income that you bring in on a monthly basis. And depending on what type of loan you're doing will depend on how much of your debt can actually go towards a mortgage payment. But when they're taking all of these things into consideration, they're only taking into consideration your new mortgage payment, what you're going to be paying on the home that you're buying. So the mortgage, the taxes, the insurance, if it has a homeowners association, any homeowners insurance that goes along with that property, in addition to any debts that show up on your credit report, things like your car payments, your credit cards, student loans, any sort of installment debt, that sort of thing. But what they're not factoring in as part of your budget when they decide, hey, John, you can afford to purchase a $350,000 home based on all this information. What they're not factoring in is how much you're spending on groceries, how much you're spending on daycare for the kids, how much you spend on going out, going to the clubs, going on vacations. They don't factor any of this stuff in to your monthly budget. And that's why it's imperative that you, as a potential home buyer, somebody that's looking to buy a home, know exactly how much you are comfortable spending every single month when it comes to your mortgage payment, because there's a very high likelihood that your lender isn't going to go over all of those additional fees. They might say, how much are you comfortable spending per month? And unless you've done your budget and know exactly how much money you have going in all these other places, it's probably going to be difficult to answer that question. So having the budget done up front prior to that conversation with the lender is going to put you in the best position to know exactly how much you're comfortable spending per month. And I'll be honest, I believe that's the most important piece of this entire puzzle. It sounds really, really simple, but most people don't have a basic budget. In addition, one thing I want to mention is that if you currently don't have a job, you don't have a credit score, you don't have money for a down payment, some of the things that we talk about today are going to be very, very difficult. In fact, if you don't have those things, you're probably not in a position to buy a home. Now, there are loan programs out there like VA loans, like USDA loans that don't require a down payment up front. But if you currently don't have a credit score, you don't have a job, those are the things that you need to be focusing on, trying to improve versus worrying about buying a home. Now, I don't want to come off as, hey, you can't do this if you're in that position, but there's a very high likelihood if you're not employed and you have really bad credit, you're not going to be in a position to buy a home. And that's really going to take me into the second thing that you should focus on while you're in this position waiting to buy a home. If you're currently out there, you haven't been through the pre-approval process yet, you're just starting the budget, what other things should you focus on as a potential home buyer to get yourself ready to buy a home? Well, the next thing we're going to talk about outside of the budget is the most important piece, and that is your credit score. Your credit affects your loan qualifications more than anything else out there. It affects how much home you can afford, but it also affects the monthly payment, which is the most important piece for most people out there. A lot of people believe, hey, I need to focus on saving more money for a down payment. And down payment is important, which we're going to talk about here in just a minute, but having a strong credit score is going to have more of an impact on your qualifications, on your monthly payment more so than anything else. So as a potential home buyer out there, I would start working on my credit score, start paying off debts in order to maximize that score. There's some things that you can do in order to improve your credit score. And one of those things is paying your balances down to about 30% of the limit. So if you have a credit card that currently has a $5,000 balance on it, and your limit is say $10,000, you're currently sitting at about 50% of the utilization on that credit card. Well, you really want to get it down to about a $3,000 balance in order to maximize your credit score in the best way possible. Now, if you're somebody out there that has a lot of debt, you have a lot of collection accounts, you're not really sure where to start, well, there's a lot of different things you can do, but I agree with Dave Ramsey's method of the snowball method, and that is writing down all of your monthly debts, everything that you have with regards to credit debt, that you're spending every single month, and put them in order from the smallest balance all the way up to the largest balance. Now, you've probably heard in the past to start with the largest balance, pay off the most debt first. Well, that can be very difficult to do for most people out there. So Dave's method is to start with the smallest balance first and pay it off. And then once you pay that balance off, you take whatever money you are paying towards that balance and add it to your second smallest balance. And now you've got more money going towards that balance, and you'll be able to pay off that balance quicker. And every time you pay off one of these credit cards, you're essentially getting some momentum. You're starting to feel good. You're paying off debt. So one of these things that can really catapult the process and help you mentally start paying this stuff off. And the more debt you pay off, in theory, the more you're going to improve your score. Now, there are some other things that you can do to improve your score, like getting yourself added as an authorized user on someone's credit card, someone that has a good history of making payments. And there's some other different things that you can do, which we're not going to talk about in today's video, but I just want to stress how important your credit score is. If you're somebody out there that has a 580 credit score and you're looking at using an FHA loan, and you say, hey, they accept a 580 credit score, I've got the 3.5% down, I want to buy a house, I would tell you to pause. And I would say, work on your credit prior to doing anything else. The difference in interest rate between a 650 and a 580 is huge. the difference in your interest rate between a 780 credit score and somebody with a 650 is huge. So the higher you can get that credit score, not only the lower interest rate you're going to get, but it's going to help you maximize your qualifications. You're going to be able to afford more home because that lower interest rate is going to allow you to maximize those qualifications and essentially get more bang for your buck. So after you create your budget, start working on your credit score. And the third piece of this that we're going to talk about today is down payment. Down payment is important when it comes to buying a home. Now, as I mentioned earlier, I know you can buy homes out there with very little money down. There are down payment assistance programs that will pay for some of this. And I realize that some people out there say, well, I want to use that. I don't have any money to put down, but I want to buy a house. Okay, I understand that, but I say you'll be in a much better position if you have some money to put down, even if you don't have to use it. Because at the end of the day, you shouldn't be buying a home, in my opinion, if you don't have some money in the bank. It's okay if you're able to get a VA loan and not have to put any money down, or you're able to get a down payment assistance program and not have to put any money down. But you still should have some money in the bank for reserves in case something goes wrong, in case you lose your job or something happens where you need to come up with more money. Say something breaks in the house, you need to have some money in order to make those repairs. So having some money in the bank, whether you need to use it or not, is up to you. But as I mentioned earlier, your credit is going to have a bigger impact on your monthly payment than that down payment. So just make sure when you're focusing on saving money for a down payment, you're also focusing on that credit score improvement, which is what we discussed earlier. So if I were new to the home buying process, these are the things that I would be focusing on: my budget, my credit score, and saving more money for a down payment. And once I had all of that in place, then I would start talking to a lender about the pre-approval process. Now, you might go, okay, Jeb, what does that entail? Well, a lender is going to look at a couple of different documents along with you filling out a mortgage application to see where you stand. So you're going to fill out this loan application, and this entire process is free. You shouldn't be paying money to see if you can qualify to buy a home. Now, some people are asking the question, how soon in the process should I start this? I'm watching this video in January of 2024. I'm not planning on buying a home until August of this year. Should I do this now? And my opinion is it's never too early to start the process. And the reason for that is because if there are some things that you need to work on, what if your credit score comes in lower than you think it is? Or you have something that you can do to improve your situation so that you can qualify for more home? Well, the earlier you find that out, the earlier you can start working on that so that when the opportunity presents itself for you to buy a home, you're in the best position possible. Now, I know there are people out there saying you shouldn't get pre-approved over and over again and it'll affect your credit score. Yes, you don't want to do that, but you have about 45 days to compare yourself with other lenders out there where it won't affect your credit score. And if you're doing this process once or twice a year, it's not going to have a large impact on your credit score unless you're doing other things and you're getting a bunch of other inquiries from other places. So don't really get caught up in that. Just focus on getting pre-approved to see where you stand to start with. And then once you have that, when you're ready to buy a home, you can go through the process again if your information is not still valid. So what you're going to do is you're going to go through that process with a lender. You're going to fill out that mortgage application. You're going to provide some documentation to them. You're going to provide things like your pay stubs, your last 2 years of your tax returns. If you're self-employed, you're going to have to provide all of your tax returns. If you're a wage earner and you just get a check every week or 2 weeks or whatever, you're likely not going to have to provide your full tax returns, but it's a good thing to have them just in case. In addition to that, they're going to want to see how much money you have in the bank. How much do you have in checking, savings? Do you have any money in a 401k, an IRA, that sort of thing? They're going to want to look at that. In addition, they're going to want to run your credit to see exactly what your credit scores are, and that's how they're going to determine how much home you can afford, because now they know your income based off the documentation you provided, and now they know your debt based off the credit report they ran. And from there, they should be able to tell you exactly how much home you can afford based off all of that information. Now, if you're watching this going, okay, Jeb, that sounds great. Where do I start the process? Well, one option is to go into your bank and talk to your lender there. Now, I would say that's not typically the best place to start. I would start with a broker, somebody that has access to these banks plus other options out there. And I'll be honest, I'm biased towards brokers because I was one in the past. But if you need a lender, someone that is trustworthy, that does business like I do. In fact, it's somebody that I know, like, and trust. I've put a link in the description where you can go fill out some basic information and a lender will reach out to you to help guide you through that process and help you determine whether or not you're in a position to buy a home. Now, please understand, I'm not in the business of selling leads or anything like that. This is a link of somebody that I know, like, and trust that can guide you through that process. So if you need that, do me a favor and check below. Now, once you've gotten that pre-approval complete, now you're in a better position to start looking at homes, talking to a real estate agent, and putting yourself in a position where you can write offers on a home. What I typically see in the past is people start the process backwards. They say, hey, I want to buy a house. They start going and looking at houses. They're looking at Zillow. They're looking at Redfin. They're looking at all of these properties. They fall in love with a neighborhood, with a property, but yet they haven't done any of the legwork to determine whether or not they're in a position to actually buy a home. And then they go through the process and they do it backwards because now they've already looked at homes. They've fallen in love with something. Now they go talk to their lender and their lender says, you're not in a position to buy a home. Your credit score is not good enough. You don't have enough money for a down payment. You didn't do this. Whereas if you do the process like we discussed in today's video, you'll be in the best position so that when you're ready to make that offer, you know that you're good to go. You know that you're not going to be making offers and not be able to qualify. Buying a home is an emotional process, so you want to be able to control as much of the process as possible. And I know a lot of you are watching this video and you're new to the process. You're not really sure where to start other than what we're talking about in today's video. Well, I created a first-time homebuyer course to really guide you through the process from A to Z. We talk about everything from buying a home to working with a real estate agent to working with a mortgage professional to writing an offer, how to negotiate, everything from A to Z. So if you want to become an expert on the process, you can always watch videos like I'm doing here, or you can take the shortcut and sign up for my first-time homebuyer course, which is linked in the description below. And if you decide to do that and you take the full course, you're going to be an expert when it comes out of the process. You're going to know almost as much as most real estate agents out there. In fact, you're probably going to know more than most real estate agents out there, and you're going to be in the best position to buy a home in 2024 if that's your goal. So in summary for today's video, start with a budget, work on your credit score, working on saving for a down payment, and then get started with the pre-approval process. And from there, you can talk to a real estate agent, start writing offers. And more importantly, now you'll have the knowledge along with the confidence to be able to take that first step in becoming a homeowner in 2024.